Welcome everybody. I'm here for Choice Home Mortgage. Thanks for checking out our channel where we talk all things about home buying, lending, and credit with industry experts. Today we're welcoming Dan Sanfilippo. Dan is a credit repair expert and the co-founder of Team Effort Financial. Today he's here to share with us tips that most credit card companies don't want you to know about your credit. Welcome, Dan. How are you doing today?
Good. Hi, Lubin. Thanks for having me.
Thanks for being here. So Dan, you've built a company that specializes in helping people with credit repair. What types of situations do you usually see from people who contact your company for help?
Well, right now it's, with COVID and whatnot, there's a lot of, late payments and a lot of high balances on credit cards and credit card debt. So that's mainly what we're seeing right now is the impact of that whole period where people were freaking out, But yeah, that's what we're seeing mostly right now.
So share with us how high credit impacts a person's credit score.
Yeah, so whenever balances on credit cards are above, say, 33%, and once the usage goes up, the balances go up, then the credit score goes down. So that's one factor that consumers actually do have control over. If everything else is straightened out on their credit, they don't have any delinquencies or charge-offs or collections, then there's dates on the right-hand side of, like, let's say, Experian.com credit monitoring, which are different from the dates that your minimum due date show on your app, for instance, for, like, let's say, Capital One. So there's one date a month that it reports to the credit bureau. So if they pay the cards down below 30, let's say it's at 95% on a $1,000 credit card, right? And that means it's at 900 and whatever dollars, right? So balance, that puts it at 95% or around there. If the client pays it down below 33% utilization, as long as it's about 2 or 3 days before that date that it updates to the credit bureau, because typically people do ACH payments. So if you can't do it on that day because it may not update in time. So the bureau is going to pull that balance from that specific creditor on that specific date that is listed on, like, Experian.com, for instance. So when they do that, it will bump the score up. It may only be 10, 15 points, but every little bit helps, especially with clients trying to get, the best interest rate.
Now, you mentioned a word, credit utilization. Can you explain very briefly what that is?
Yeah, so credit utilization is just the difference between the limit and then the amount used on the card. So if the usage or utilization is at, again, 90%, then the score's dropping.
Got it.
So anytime that balance, a lot of people go, I don't know what happened, my score dropped, or my score went up. They don't understand what's happening because there's different dates that it reports to the bureau. So those dates for each credit card on that day, if they didn't pay the balance, or maybe they paid the due date, right, and then they used the card the next day before it updated to the bureau. So the balance goes up on the utilization, the score goes down.
I see. So for example, on a $1,000 limit, and when you're saying 33% credit utilization, they should only be using like less than $330.
Yes,
Got
if
it.
you're applying for something. Now, of course, you don't have to keep them below 33%, but just so that as long as you know everything else is clear on your credit, and the only reason it's low is because the cards are maxed out, you can pay down the cards and the score will go back up.
Great. Totally appreciate that. So sometimes you hear that carrying a high balance on your credit card isn't good for your credit, and I guess it depends on what the credit utilization rate is or how much of it you're using.
So really it more depends on, are you applying for something?
I see. So applying for a car loan, a home loan.
Yeah. Anytime you're applying for something, if you want to be strategic so you have the best chances of getting the best possible approval with the highest limit and lowest interest rate, those are things that are within the consumer's power to raise their score up. So a lot of people don't pay attention to that, and they get a lower limit with a higher interest rate, and they don't understand why. But for instance, if you're applying for a credit card specifically, you want to make sure they're paid below 33%, each of them, Otherwise, you know, like you're saying, as far as the balances are concerned, when you're applying for something, if the balances are high and you're applying for a new credit card, it's a risk factor. Because why is Lumen applying for another card? She's got 5 already and they're all maxed out, right? So this is a risk. She's just going to max this one out. Maybe she's about to file bankruptcy. Who knows? The algorithms now just kind of do their own little thing and they check off boxes. So yeah, that's where it really matters. If you're not applying for anything and no money's tight, hey, don't worry about it. Just you know that when you do pay them down, your score will go back up whenever time permits and money permits for that.
Great to know. So what are some ways to pay off credit card debt? Some strategies that you can share with those who are watching?
Yeah, so a lot of what we're seeing, I'm not a fan of debt relief, and really we don't do traditional credit repair. So I more consult people on how to, you know, get things done on their credit. But traditional credit repair, they typically have about a 30% success rate getting one late payment off. So a lot of my clients come after they've been at other entities for years and not getting the results that they, you know, were told they were going to get or they expected. And then with debt relief and debt settlement, what consumers don't realize is when they negotiate the settlement for them, let's say they've got a $5,000 balance on a Discover card that they haven't paid in a year because they just started getting late. A lot of people get upset because they don't think they should have got the late, then they just stop paying it, or money's tight, they can't pay it. So now it's in charge off. So what happens is debt settlement, debt relief companies, and credit repair companies, they'll negotiate the debt. They'll say, okay, just give us $1,000 and we'll get this taken care of for you so it's no longer hurting your credit. Never really letting the client know that it's actually not going to raise your score even 1 point, settling it. And
Wow.
what it's really going to do is more damage, because they're going to take that $1,000 and they're going to settle and give them pennies, maybe $300, and they're going to keep $700. The client doesn't see what actually got settled, what the amount was, but the banks do. And on their report, now it goes from charge off to legally paid in full for less than the original agreed upon amount. Now, when that happens, common sense committee tells you, if you think about it, the very next bank that looks at your credit is going to say, hold on a second, Lumen. So you borrowed $5,000 from Discover. It took you 1-2 years to give them back $300. Why would I lend you any money? So you can do the same thing to me? So it's really a disservice, in my opinion. If anything, make payments, settle the full debt so that it says was a charge off but is paid now. Instead of you borrowed money and it took you 2 years to not give back the full amount. You know, so paying it off, a lot of times I'll tell people to, you know, get a loan, a personal term loan. Maybe you get a home improvement loan, whatever. You do something other than I need to pay the debts on my credit with a loan, and then you use that money to pay down your cards. So
That's great advice. It's not something that you usually hear
Yeah.
in circles or even in articles that are.
they don't teach us this stuff in school.
And
Even my parents as a kid, go get a secured credit card and borrow against it to build your credit. Worst advice I ever got. Banks and algorithms today that check your credit, they see secured credit card. Oh, Lumen, you had to borrow money from yourself? Okay, cute, but you're not the client for us.
got it.
Nobody else would lend you money, so you had to get a secured credit card. And that's just the facts of reality today with the financial world.
And which is why we have you on the show to share these tips for people who are in need of helping to repair their credit, build back their credit. Really quick, how did you get into this industry? Would you care to share a little bit about the backstory, or?
Yeah, just I had a friend that was my mentor who kind of showed me a little bit about how our process works with fixing the credit, and then we kind of refined it from there. He's since passed away, but we've continued to refine that process. And it really started out with me in the same boat. I had a business many years back where the industry changed, and we were doing TV, radio, and internet marketing and whatnot, and the industry changed. We had to pivot, and we wound up in a bunch of debt, so I had to figure out how to get out of that and work my way through instead of filing BK. Even though none of it was my fault, it was just the industry had changed and nobody was paying their bills anymore. but we had contracts out. So then I learned this process and then refined it. And since then, I've gone through so many files with people that are trying to get mortgages, trying to finance cars, and learned just a lot through, trial and error and experience with almost 1,000 clients that we have now that we, help and advise.
Unfortunately for us, we have you on here to share some of these tips and tricks. So really quick, one of the common advice bits that I see is that you should close down your credit card accounts. Is that true or is that false? Is that a
You
myth?
should close them down?
Yes.
No, that's nothing could be further from the truth. You never want to close cards down. I have little old ladies that call me and they say, Dan, I think I did everything right. I was fixing my credit. I just paid off all my credit cards and closed them so I wouldn't have any more problems. Well, Mrs. Jones, you had a 99, opened in 99, American Express card, which what generates your credit score is open trade lines. Trade lines are credit cards, auto loans, mortgages, but it's got to be an open payment history. This is what generates your credit score, is how long have you been paying on time? So when people close those accounts, all that history drops the score because it's no longer relevant and it's not generating a score now. So that open payment history is what's giving you the score. When you close it, it kills your score.
So keep it open, pay it off.
Keep them open. If you've got 30 accounts, sure, you can get rid of certain ones and close them, but you want to make sure you maintain the ones that have the oldest history because that's what gives you the credit score.
Is there generally a number of credit lines that a person should have? Like, would you say 5 or 10?
Minimum of 5.
Okay.
Minimum of 5 is what banks look for. If you even, we use Experian.com because it's the most widely used, the most accurate monitoring site, and it gives you a lot of detail that the millions of other credit monitoring sites really don't give you. And on Experian, it'll show you if you have 2 accounts open, for instance, literally right below that, it'll say you have a thin credit file. Having less than 5 open accounts can make you look somewhat risky to lenders. You only have 2 accounts open. Some lenders would consider you a thin file. So, yeah, you want to have at least 5 or more.
Sounds good. Now, in terms of checking your credit history, how often would you recommend a person do that?
I have my app and it gives me notifications, so I can just kind of keep the pulse, check the pulse regularly. So it'll give me notifications here and there to kind of, log in and look at it. Again, if I'm not really applying for anything and I've made sure everything is being paid on time, I don't really need to look at it too much. But if I am applying for something in the next 3 months, then I want to start looking at those dates and start being able to kind of strategize on knocking down the balances so that they update on those dates. So my score goes up and I can have the best chance of getting, approved for whatever I'm trying to do.
Great. And what are your favorite apps to check your credit score?
I would just say Experian.com is what I use. Yeah,
Great.
Credit Karma's the most inaccurate scoring site. I don't know if I should be saying this on video, but it's true. Anytime you look at Credit Karma, the scores are way off. So I always tell clients, don't rely on that. And it only shows you 2 bureaus, so it doesn't even help you for a mortgage because they want to see the middle score. And they're looking at a different calculation altogether anyways.
Great tip. Any other tips or bits of advice that you'd like to share further?
Just, if you log in, if you set up an Experian account, it is free. You can see the other 2 bureaus on a paid monthly membership, but just setting up Experian.com, the free one, and then clicking on your accounts, on the far right-hand side of each credit card, it shows you the balance updated and then a specific date. And that date could say January or December 15th. The month doesn't so much matter as the date every month that it's going to update. So if it says the 15th, then every month on the 15th, that American Express is going to report the balance to the credit bureau. Again, different from the minimum payment due date on your app. So that's just something I would say is just pay attention to those things, and you can kind of control your own credit score by making sure that those are paid down. You can see how it goes up. When the balance goes up, you can see how it goes down. And those are things that you can do to help your credit. Of course, if you have negatives and charge-offs, that's a different story. That can restrict the ability of it to go up, as high as it would if it wasn't there, those negatives.
Great stuff. So in the event that somebody wanted to work with you, are they able to get a hold of you through a website, through phone number? Is it
We
one
really
of these?
just work based on referrals.
Okay.
I try not to, I don't market to the public because been so many different credit processes over the last few decades, and people start figuring out how to do it, then they screw it up, then they burn it out, and we just don't. We're blessed with a massive amount of referrals from different mortgage companies like Choice Home Mortgage and other ones throughout the United States. So, we're happy with that, but yeah, you'd have to get referred to me in order to get our help.
Well, it's good to know that you've been very busy, and that's great for you and your business. And we're lucky just to have you on the show, just to be able to share some of these tips and some of these bits of advice for our viewers looking to repair their credit or build up their credit. If you found this video helpful, please like and subscribe to our channel, or leave any questions or comments down below. We will be sharing weekly content to help you along the process of purchasing or refinancing your home. We're here to help you make the right choice. Thanks for watching, and see you again next time. Thanks for coming on, Dan.
Thanks for having me, Lemon.